Hello traders, this is Rashad, a freelance technical analyst, and I'm here to present some trading opportunities for next week. Firstly, I want to take a look at the dollar index and the S&P 500 chart. A couple of weeks ago, I noted in the video that I'm expecting the dollar index to rally to test the back of this broken trend line resistance. This trend line is drawn from the lows formed around April to June 08 and November 09 and November 010. This is a daily chart, by the way, and it's broken on March 2011 this year, and I was expecting the dollar index to rally a little bit higher into the 77.10 or so level before it finds some resistance and look back to a support around the 50% or 61% retracement of this rally. But what we've seen on Thursday and Friday, that the dollar index closed below the 61% retracement of this rally, and move down was in what looks like a 5 waves, and that signals that the dollar index will be looking for a new low. It will probably correct a bit higher to a 3 waves correction to the maybe 50% or 38% retracement here before it resumes its trend lower to break the 72.70 low here formed on the 3rd or the 4th of May. So that gives a signal of what we'll be expecting to see on the dollar pairs. Looking at the S&P 500, after we've seen a move lower from the top here in 3 waves and 3 waves higher, and the S&P was closed on its back foot on Friday, and we've seen the correlation between the S&P 500 and the dollar index last week broken in a very strange way, where the dollar index closed at its lows, and still the S&P 500 couldn't rally, and it's probably gonna test a bit lower before it finds supports and hits higher again. But anyways, the move down here in 3 waves, it signals that we are into some kind of bullish consolidation pattern, and as soon as we find some support in the S&P 500 here, we're gonna pretty much see a rally in the risk pairs. When a multi-year correlation breaks, it don't last long. The dollar and the S&P 500 are moving down along with each other within the last week, and as soon as the S&P 500 finds a low, they will start the correlation will get back on, and the S&P 500 will rally, and that will accelerate the losses in here. That will accelerate the losses after the 72.70 level lows here get broken. So by the look at the euro, this is a daily chart. I wanna note here that some might say that this move down was in 5 waves, and we probably gonna see some kind of a B wave here as it touches higher, a bit higher before or just shy from the top here before it goes lower again to the maybe the 1.35 level. But I'm not much into this scenario. I wanna note here that the top we formed on November 09, and this trend lower which lasted till we've seen a low on June 010. When the euro moves lower, it don't correct that sharp. We've seen here it corrected like 38% retracement of this move down, and here as well 25 to 38%. So, and on this move down as well on the recession in 2008, best correction we've seen on this move down was around the 38% to the 50% retracement of this move down. So when the euro moves down, it don't correct that sharp, and this is why I assume that the euro, along with the analysis I've just explained on the dollar index and S&P 500, I'm assuming that the euro will move higher from here, or form some kind of a consolidation bullish pattern, which will break higher to a new multi-year high above the 1.5 level. If we zoom in into the hourly chart, this looks pretty much like a 5 waves up from the bottom. 1, 2, 3, 4, and we're currently in the 5th wave higher. So we should find let's show it onto our chart. 1, 2, 3, 4, 5, and probably we're gonna find a resistance around the 1.47 level, or a bit higher, the 79% retracement of this rally, as it forms some kind of a consolidation pattern before it hits higher again. And the trades that I'm stocking for next week, it will be the Aussie, a clear corrective pattern, found a low here at the 1.0450 level. It broke higher from this falling trend line resistance. It came back, tested this support, and it moved higher in a choppy price action. And the spike here from this lows, and spiked higher from this top resistance here. We probably gonna see a consolidation bullish pattern, or a break higher right away from this level. So I'm long Aussie, small sized position around these levels. I will be looking to add as it moves lower. The stops will be below this low here, and I'm targeting here maybe the 1.10 level. I'll book some profits as we and lock on profits as we move higher. So the trade here is long the Aussie around these levels. Add is as it corrects a bit lower, if it corrects lower at all, and target will be at the 1.10 or higher. The euro yen, I was stocking the correction here. This is the 10-minute chart. A few weeks ago, I noted in some video that this is a very clear corrective pattern, and I was stocking where I can establish my long position as I was stocking this 5 waves, this C wave down, which is forming in 5 waves down, and I think that we have seen the wave 2, this is wave 1, and this is the wave 2 bottom around the 113 level, and this is some kind of 1 2 1 2, and with 3, and the momentum, the move up from the test of the 116 with the high momentum we've seen on Friday, that signals that we might be on the third of the third higher, which will break to a multi-year high. So the trade here is longing the euro yen around these levels, or and add more as it moves a bit lower to test the 117 level or something, and the stops will be below 114.50, and the target is I will close some as it tests the 121 level here. This is like 300 pips from here. Maybe the stops like 300 pips lower, and it's a bit risky, but the reward will be at least a new yearly high. So it's gonna pay back good if it worked. So the plan here is longing the euro yen around these levels, and as it tests lower, stops 114.50, targets 121, and above this high here. Alright, good luck trading next week, and stay tuned to the Twitter as I post my trades there as I trade it. Good luck.